I think we both agree there will be this hyperbolic scenario. Bitcoin will be by far the best asset physically, dynamically, mathematically, above all other. But the powers that be, with the largest armies, the biggest balance sheets, and all the political power, they will fight. They will fight till the death. It's really interesting time we're living in. Lots of things are happening, big things. And well, one of the things, of course, is the quantitative easing, the printing of money, the stuff that's happening in the US with the $3.5 trillion bills that are introduced and the money that's needed for that. And the world is drowning in money. Every time there's a new problem in the social aspect, could be COVID relief, in the banking sector, in some other sectors, the only solution seems to be money printing. And if that were the solution, of course, Venezuela and Zimbabwe would be the richest countries in the world. It is not the solution. It will make the problem worse. But what we see, of course, as a consequence is lower interest rates. The negative interest rates in Europe persist, so even go down a little. So that is an unheard of situation. We've never seen that a couple of years ago. And we've seen asset prices rising and rising and rising. I don't know how it is in the US, but in my country, the Netherlands, also other countries in Europe, the rising housing prices are really getting problematic. It's nice if you're the owner of a house because you can almost stop working and just refinance the house every year with the increase in value. Yeah, and people that don't have the money or the start capital, and that's more and more people, they can't buy a house. They have to rent a house, but rents are going through the roof. It's such so that people cannot get away from their parents' houses and get into big troubles with their finances because the houses are so high. And now they're all making measures in the tax sphere, so taxing house owners, etc., as if that were the problem. No, the problem is the money printing, and all that money has to go somewhere. Equities, real estate, Bitcoin, gold, well, the asset inflation. And now that asset inflation is, of course, spilling over in consumer prices, energy prices first, of course, and it will go down to core inflation as well. Core inflation is the inflation basket without the energy prices, because that's the volatile component in the inflation index. And the core inflation is what central banks are tracking. That will go up. That's the last thing that's going up. But yeah, everything is going up. I mean, must be different in the US as well, but in Europe, so winter is coming, right? So heating prices, oil, gas, electricity, double at the moment. So households are going to pay double the gas and electricity prices next year, and that will certainly cause problems. And it's very interesting. And then if we look geopolitical, it's very interesting what's going on with China and the US at the moment. I think it's Evergrande thing in China with the real estate debacle going on there. The US bashing China. It's all started with the tariffs, of course, the trade tariffs under Trump, but it goes on. And China, of course, looking at Taiwan now after it took Hong Kong. Those are big movements. And the South Sea situation militarily, it's all very, very volatile and very... you need one match to light the whole thing up. And it's scary in a way. First, from a logical point of view, if printing money was the solution for these problems, then, like I said, Zimbabwe would be the richest country in the world, and every country would be doing it. And of course, that's not true. And through the ages as well, the Roman Empire died part of because the debasement of the currency, the printing of the money, it was the denarius at the time. So the silver content was diminished from 90% to 0%. And that caused big troubles because nobody accepted that money anymore because it was like monopoly money. So that's one. But on the other hand, the debt that the US is creating to keep the dollar going, to keep the government going, to keep everything going. And the same in Europe, by the way, but the US, of course, the reserve currency, that debt is someone else's asset. The asset can be in the pension fund. It can be, most of US debt, by the way, is owned by China, right? So that China is making all this stuff for the world, for the US, earning a lot of money, but then parking that money in the treasury bonds, so in the debt of the US government. And that debt, of course, and we all know that, right? All institutional investors know US debt will never, ever be paid off. We all know that. But we also know there will be new debt. There will be an extra credit card, if you will, to pay off the old credit card. And as long as that goes on, that's all fine. But it cannot go on.
It requires rates to keep going down.
If you would increase interest rate right now, the debt would be, unserviceable. The US could not pay the debt of when interest rises with the current tax income. So it's unsustainable. They have to keep rates low and keep decreasing them, or the whole house of cards will fall down. And of course, China sees that as well. Because imagine that you have all this US debt, and you see that the debt is printing its own money, and you know it will be worthless one day. So what will you do? You'll spend it like a madman. And you see them doing that. They buy every gold mine, every scarce commodity mine in Africa. They buy all the harbors in the Middle East, in Europe even. They buy everything with the US dollars that they have, except more US debt, of course. And that's a smart thing. So by printing and printing more, the US is actually making China stronger and stronger every day. I'm sure the military thinkers and geopolitical thinkers will see that, but there is no alternative. So they have to keep doing it. And, well, Europe is in the middle. We're watching it happen. It's a crazy movie we're watching.
Your statement there that they have to keep doing this, is most of it because you got into the government reasons of why they can't allow interest rates to go up, because then, it's not serviceable. But even at the individual level, if interest rates on home prices go from 3 to 4.5%, like, you have just obliterated your common person, where most of their net worth, you go to your typical person, I don't care if it's an American or somebody over in Europe, anywhere in the world, if you raise their interest rate for home prices by 100 basis points or 200 basis points, all of a sudden, they're getting murdered if they're trying to move into a new house. So is it the net worth of the individual being tied up, so much of it being tied up in the value of their house, and that basically being their net worth, that interest rates just cannot afford to go up in any type of meaningful way for any type of meaningful amount of time?
Well, I think it's two things. It has to do with that. If you make that broader, the wealth effect, the Federal Reserve is always talking about the wealth effect with households. And of course, the house is the biggest asset mostly, but the more well-to-do people, of course, also have the equities portfolios. If you raise interest rates, everything of value will be discounting those higher interest rates, and the value goes down. So a very easy way for the U.S. central bank to play this wealth effect and to make U.S. households think that they're rich and can spend in the economy is to decrease interest rates and increase all the asset prices, the houses, the real estate portfolio, the equity portfolios and bond portfolios. And people feel wealthy and buy stuff, and the economy keeps going. Of course, that's the other way around. When you raise interest rates, everything goes down. It will crash the stock market for sure. It will mathematically and by definition take the bond prices down. So portfolios, pension funds, everything will go down, and real estate indeed too. But I think the more direct thing is the U.S. government itself. It needs the money to pay its employees. I don't know the exact number, but it's very high. The number of people in the U.S. that are paid by the government is about 70%. 70%. 7 out of 10 people are paid by the U.S. government. That's a lot of money. If they don't have the money, if they don't print the money, because they earn nothing, then that all stops, right? With the whole story with the debt ceiling. So they just raise the debt and a debt ceiling and can print more money again. But who's going to pay that? The world right now is okay with that. But there will be a point, and the Roman Empire crossed that point. There will be a point that people do not accept the US dollar anymore. The big battle is between math and thermodynamic certainties. Bitcoin, if you will, the best money ever, theoretically and mathematically, and the powers that be, right, that want to protect what they have, because they're going to lose it all, right, or a lot of it. So, it's a political power game with the most powerful countries and armies in the world and central banks against a mathematical, physical, thermodynamical, optimal solution. So, I don't know who wins, but it sounds like the church at the time saying the earth was flat, and some weird mathematicians saying the earth is round. And in the end, of course, the optimal solution wins. The truth wins, but it can be a lot of war and nasty times in between. real estate is not fungible and it's not portable either.
Yeah.
So on all those dimensions, Bitcoin is the better money. On the other hand, the only thing where we differ, I guess, is the timing of the events. So yes, the dollar will die. I mean, every reserve currency dies, right? It's a certainty. So there will be something new, something better. But when is that happening? It's the same question as the super cycle. Are we entering the super cycle now or later? I think the super cycle will be there. It's inevitable, but not now. I think it will happen after next halving, if you will, after the stock to flow of Bitcoins will be higher than gold and higher than real estate, because until that point of a stock to flow of 100, real estate will, for whatever reason, be the preferred asset, as we're seeing right now. I'm seeing around me, people put more money in real estate, like hundreds of millions. BlackRock, for example, is buying the entire city of Amsterdam because those companies and the money right now is with old people. The real estate and the gold, the physical world, and not the digital world. The digital scarcity is a next generation thing. So I think it will happen. But I also see in my own model that there is a linear relationship between scarcity and value. And I agree that is one of the dimensions of money. Fungibility is the other one. Portability is another one. Divisibility is another one. That's also very problematic with houses, divisibility. But scarcity is in my view, the most important factor causing that linear relationship and causing people to put more money in real estate now. That will change once, next to divisibility, fungibility, portability, also the scarcity of Bitcoin will be better than real estate. So my guess would be, we're probably going into that question right now, but so are we going into this FOMO hyperbolic scenario right now or next year or the year after? Or are we going to drop 80% first, have a big war with the powers that be, the central banks, the US dollar, et cetera, and go into that hyperbolic scenario or a US dollar scenario, if you will, where Bitcoin is the best store of value after the next halving? So say 2024, 28, that will be the period, or maybe a little bit after that. Let's say somewhere between 2024 and 2032. Yes, I think we both agree there will be this hyperbolic scenario. Bitcoin will be by far the best asset physically, dynamically, mathematically, above all other. But the powers that be, with the largest armies, the biggest balance sheets, and all the political power, they will fight. They will fight till the death.